and particularly thank you to Exprim and the organizers for inviting us again to this to have this opportunity to talk to you about this very, very important topic, the NatCat protection gap. So just to set up the scene, an active hurricane season in the North Atlantic and a series of wildfires, thunderstorms, and severe precipitation events across different regions pushed global catastrophe insured losses to their highest level ever recorded in a single year. While the economic loss was the second largest at $337 billion US dollars. Globally, more than 11,000 people lost their lives or went missing in disasters during 2017, while millions were left homeless. In particular, a cluster of Category 4+ hurricanes, Harvey, Irma, and Maria, in the North Atlantic, which after 12 years of an unseasonally low frequency, left a trail of destruction in Grand Cayman, in Puerto Rico, the Caribbean islands, and Texas and parts of Florida. According to preliminary estimates, the total impact of HIM is around $92 billion. Insured losses from wildfires in California and in other parts of the world went to the total highest ever recorded at around $14 billion. There were also a number of severe precipitation events, and this highlighted again the vulnerability of our increasingly urbanized society. This gives us the picture of how the total economic losses from NatCat and large man-made disasters happened in 2017. But this only sets the scene for the NatCat protection gap. And what is the protection gap? How do we define it? Very simply, as the difference between economic and insured losses. All there. Whatever is not covered by insurance becomes the NatCat protection gap. And what about the NatCat protection gap? Well, catastrophe models estimate the NatCat protection gap globally at around $153 billion US dollars of annual expected loss. What you have in this chart on the right-hand side is the uninsured part for each of the perils for each of these countries, and on the left-hand side, the insured part. And I'm not sure anyone can actually read it, but at the top, you have the USA. The green part are the wind perils, the red part are the quake perils, and the blue part are the flood perils. And it may surprise you to see, it surprises me every time I see it, that there is so much uninsured quake, for example, in the US. In California, the earthquake penetration for homeowners is around 12%. And California has a high penetration for the US standards. If you keep going down, you will see Japan, China, Mexico, Italy, etc., etc., etc. We may argue that this is modeled loss, that models may or may not be at the right point, but reality has shown us that over the last decade, the global NatCat gap has been there. We have had total losses of $2.3 trillion over the last decade. 70% of those $2.03 trillion US dollars were uninsured, were losses that ended being paid by society. During 2017, catastrophe and large man-made losses were $144 billion, the highest level ever recorded in a single year. In Europe, these were $23.7 billion, of which $12 billion were covered by insurance. So this leaves us with only a 47% protection gap. This 47% protection gap for all of us sitting in this room is not only something, at least for me, a bit terrifying, but it's for all of us a big business opportunity. That 47% of losses is untapped market. In Europe this year, most of the losses came in periods of weather extremes. A lot of it was a cold snap early in the year that had a significant impact on the agro side. We also had in Portugal the bushfires, well, not bushfires, actually, the fires in the forests. 65 people died in one event in June. In October, there was another round of wildfires in Portugal. And while Portugal is prone to this kind of forest fires, the number of hectares that burned from the beginning of the year through end of October was 53 times as much as the average of the previous 10 years. This gives you a magnitude of the amount of destruction that bushfires happen. You have at the bottom here the insured part, at the top the uninsured part. This is global losses. And while we see the trend of an increasing insured loss, the uninsured loss increases much faster. I tried to pull an example closer here. This comes from an analysis performed by Standard & Poor's, and the expected effect of a 1 in 250-year flood in the Czech Republic would be a damage of 0.6% of the total values in the country, 50% of which would be insured. Daniela had already said that there is a high penetration in the Czech Republic. I was surprised when I read the numbers. I was like, wow, good job. Here we have already 50% of the loss being picked up by insurance, and that is already quite a good thing. But still, this would mean not an impact of 0.22 notches in the Standard & Poor's credit rating for the country. Most of it comes from net general government debt that would increase by 2.8% over the expected baseline of 5 years, and the GDP per capita would fall 0.4% compared to the expected baseline 5 years down the road. So the protection gap is there. It's in most of our countries, and it sits at different levels, and it has different solutions. We can think of macro, micro, and meso solutions, but also of pools and traditional products. And I will not try to speak about all of them. First, because there wouldn't be enough time for me to do that, and second, because there's people with much more expertise than I do in most of those spaces. So I will focus on the retail side. I will focus on traditional products. What can we do to increase penetration from the public? And of course, technology will play a significant role in the property personal lines insurance. We see social networks, cryptocurrencies, big data, blockchain, Internet of Things, artificial intelligence, and they will be playing in different parts of the value chain, from marketing, underwriting, pricing, policy admin, etc., and also in the client service and customer engagement. And all of these technologies will have different impacts, and hopefully will all of them make insurance a product that is more desirable to the end consumer. I have been working in the insurance industry in one way or another for 20 years, And the day still hasn't come when I wake up one Sunday and I go like, maybe I should go buy that insurance policy. It would be so nice to have it. I never have had that desire to buy insurance. I don't know if anyone in this room has ever had that. If you have had that, please do let me know, because I want to learn a thing or two about the products you buy. But for all of us who haven't ever had that, I think that's the key that we need to break as an industry. We need to find a product where that is not only beneficial for the consumer, but that the consumer actually realizes its benefits and wishes to have it. Hopefully we will find some solutions, and I tried to focus on a couple of the things that we at Swiss Re are trying to push to complement some of our clients' insurance portfolio, and offer a couple of new things. So one of them is an earthquake cover for SMEs in the southeast of Europe. This is a parametric product, and its main characteristics are a swift payout that ensures continued business operation. It requires no proof of loss. The payout is based on regional shaking intensity, so it's not location specific, but it actually pulls your area of business, because that is how the product conceptually works. You are operating in a space that has been disrupted by certain shaking, therefore you will either incur exceptional expenses or not be able to derive enough income out of it. And that is how the product is conceptually designed. It is a broad product with it is part of a broader product suite, and it leverages the agent channel of our client. It provides an additional revenue stream for both the client and the channel, and it's really innovative in the market. It provides this reputational badge of being the first out in the with the product. It is sold as a standalone product as well, and it has been approved as insurance by the regulator in this market, which is not always a given, particularly with parametric products. No. Another example that we have is, and the title is not right. It should say volcano cover for Japanese businesses. And here apologies for that. This product is actually not approved as insurance. This is being sold as a derivative. The regulator in Japan decided that it was more akin to a derivative product. I still feel it is very much insurance. But since it's being sold to large corporates, it doesn't really make much of a difference regarding the accounting treatment. And here we developed it with one of our clients, first for Mount Fuji. And there is a huge industry, a huge amount of industry that depends on the flow of tourism up Mount Fuji. If Mount Fuji is declared as in risk of eruption, then the authorities start closing it from the top down, and there comes a space where the tourism gets significantly affected, and this has a knock-on effect on all sorts of industries, from hotels to the manufacturers of chopsticks. And now they have available a coverage that depends on the magnitude of the alert and gives them access to funds also in the absence of a physical loss. And the third example that I wanted to bring to you is a parametric cover for homeowners in Florida for wind. This is meant to be a complement to the traditional indemnity products that are usually sold in the American market. In Florida in particular, wind deductibles tend to be relatively high, and the list of exclusions is endless. Particularly everything that is outside the walls, you can, with a very high certainty, be sure that it will be excluded from your coverage. And there is a need in the market to have this coverage extended to those type of goods, from your pool to your gazebo to your manicured garden or your fancy cladding of the house. And this is a fully electronic customer journey. This product is being pushed by a very innovative startup. They are really going for a fully digitized customer journey, from the approach to buying the policy, to providing the proof of loss, to getting the payment back from the insurer. And it's been sold through this online platform. Agents can also have access to it through the same digital customer journey. And the intention is to sell it as an add-on to existing policies. So these are three examples of the kind of parametric innovative products that Swiss Re is developing with our clients around the world. And while I don't expect these in their own to close the 153 billion of gap, I hope that they will allow us to showcase the value of insurance and convert non-buyers into believers. And we have 128 other solutions that are being developed around the world for different perils with different objectives and in different geographies. And that is the way Swiss Re is trying to put a little bit of a grain into this protection gap.